Howdy, y'all. Welcome to Liberty Call. Today is Wednesday, April 24th, 2024. I'm feeling a little bit better today. Every day is a little bit better after having surgery last Thursday. So able to breathe a little more each day and make it up and down the stairs. Haven't fallen again, so that's a good thing. So anyways, hope you're having a good day out there. My boy Jake is itching to go play. He's been bringing me toys all late morning and all afternoon. He's ready to go play some ball. So now the market's closed. Going to finish up with the news of the day, and then we're going to go out and play. So anyways, if it is your first time watching Liberty Call, if you could give me some thumbs up, a like, a share, subscribe, a follow, and press that notification bell. All righty, let's go ahead and get into today's numbers. It was kind of mixed today here domestically. Dow Jones was down 0.11%, 42 points. Closed at 38,460. S&P 500 up 0.03, so basically flat. Closed at 50.72. NASDAQ up 0.1%, closed at 15,712. The VIX was up 0.7 today. It's at 1580. Canada down 0.63, Brazil down 0.11, and Mexico down 0.36. Over in Europe, Germany was down 0.35%. The UK was down 0.06%. France down 0.17%. The Netherlands down 0.09%. Spain down 0.43%. Italy down 0.27%. Switzerland down 0.86%. And Portugal down 0.95%. So noticing a trend there. Everything was down less than 1% over in Europe. Let's see. Russian exchanges. Where are we? The MOEX down 0.23%. The RTSI up 0.72%. And the Asian markets overnight, the Nikkei in Japan was up 2.26%. Wow, that's a big jump. Australia down 0.01%. New Zealand up 0.89%. In China, the Shanghai was up 0.76%. The Shenzhen Component up 0.74%. China 50 up 0.35%. DJ Shanghai up 0.77%. Hang Seng up 2.21%. And the Taiwan weighted, let's see here. It was up 0.97% as of the close on the 23rd. So, all right. Well, that is all the markets for today. Where'd Jacob? Oh, he's sitting underneath me now. So, all right. Well, let's go ahead and get over to the market recap and see what happened today. U.S. stocks pair gains on surging yields, but Tesla-led tech climb limits the downside. All right. On Wednesday, U.S. stocks relinquished gains amid surging treasury yields and weakness in industrials, but a surge in Tesla shares buoyed the tech sector ahead of another round of earnings from big tech companies. Tesla's stock soared over 11% after the electric vehicle manufacturer announced plans to accelerate the launch of new EV models, including more affordable options to the second half of 2025. This news sparked optimism about Tesla's future growth potential, particularly with the introduction of cheaper EV models and increased sales of its high-margin self-driving software. See, let me break here. I don't understand why Tesla isn't in works with like Ford and General Motors and Mercedes-Benz and offering this technology as a standalone unit that you could add into your vehicle. I think that'd be awesome. Personally, if I'm taking my cruising across the country, dragging my trailer, it'd be nice to set the the automatic driving, cruise control, and just let it go. But, hey, they just want to do it in their own cars for now. So anyways, jumping back in, the tech sector remained in focus as Meta Platforms, Microsoft, and Alphabet were set to report earnings later in the week. Additionally, chip stocks saw gains following Texas Instruments' strong Q1 results and optimistic guidance for Q2. However, industrials faced pressure, with Boeing slipping over 1% after a credit rating downgrade and concerns about addressing quality control issues. Now, before you get too itchy about Boeing, most of these problems have been more on the maintenance side, whether or not it's United or Southwest or whoever the maintainers are at these individual airlines, fairings and cowlings coming off. I mean, that's just poor maintenance. So, I mean, that's not necessarily a issue with the air or with the plane itself. It's just they're not being taken care of. So I got a little experience. I used to take planes apart in the military. So let's see here. Where were we? United Parcel Service, Inc. also dragged down industrials after reporting a mixed Q1 results, with earnings beating but revenue missing expectations due to a drop in shipping volumes. JetBlue Airways weighed on airline stocks with a forecasted steeper drop in revenue for Q2. Uber's stock declined amid worries about rising competition in ride-hailing following Tesla's announcement of plans to enter the market. Humana Inc. fell despite beating first quarter profit expectations, while Hasbro gained after reporting better than expected first quarter sales. Energy stocks dipped as oil prices fell despite a surprise drop in U.S. inventories. U.S. crude inventories declined by 6.4 million barrels, contrary to expectations of an increase. Shock. The government was wrong again. Overall, the day saw mixed performances across sectors, with tech and chip stocks leading gains and amid broader market pressures from rising treasury yields and industrial weaknesses. All right. So that's that. Let's move on to a little deeper into the data. March durable goods. This report comes from First Trust. So let's browse through this and see what they had to say. All right. In March, durable goods orders in the U.S. surged by a healthy 2.6%, largely driven by gains in the transportation sector, particularly commercial aircraft, which saw a substantial increase of 30.6%. Motor vehicles and parts also experienced solid growth, rising 2.1%. Excluding the volatile transportation sector, orders increased by a modest 0.2% in March and only 1% over the past year, adjusting for inflation. Rising orders were observed across most non-transportation categories, with notable increases in computers, electronic products, fabricated metal products, and machinery, partially offset by declining orders for primary metals. Core shipments of critical components for business investment and GDP calculation rose by 0.2% in March and at a 2.0 annualized rate in Q1 compared to the Q4 average. However, the growth in shipments has significantly moderated since the beginning of 2022, likely due to the Federal Reserve's tightening of monetary policy. Despite the overall increase in durable goods orders, the economic outlook remains uncertain. Various factors such as the Federal Reserve's monetary policy, with withdrawal effects from the COVID-era economic stimulus and the ongoing shift towards services may contribute to a rocky path forward. Goods-related activity is expected to soften as the economy adjusts, although some durable goods supporting services may remain robust. In related news, the Federal Reserve reported a 0.4% increase in the M2 measure of the money supply in March. However, the M2 measure remains down 0.3% from a year ago and 4.1% from its peak in April of 22. This decline raises concerns about real GDP growth in the coming year and underscores the lingering risks of a recession. So, yeah, good news. They always got good data coming from First Trust. They're one of the best in the business. All righty, last up, we got an article here. If you're a first-time home buyer, probably not real good news for you. First-time home buyers must earn $120,000 to afford the average home. Whew. Man, that's tough. All right, a recent survey by Clever Real Estate reveals a stark reality for many Americans. The American dream of homeownership is slipping away, replaced by the grim prospect of lifelong renting. The median priced home in the U.S. now stands at $332,494, a figure far out of reach for most households, with median incomes lagging behind at $74,755. Even a 10% down payment requires an annual income of $119,769, leaving many struggling to afford a home. Historical data from the National Association of Realtors indicates that the last time the median buyer could afford a 20% down payment was in 1989. Woo! Today, the median down payment is just 15%. This situation means that a median income family would need a substantial 45% down payment or a significant drop in mortgage rates to make home ownership feasible. The challenge is further compounded by the slow pace of savings accumulation, with it taking over 5 years for a household to save for a 20% down payment, even with a monthly savings rate of $1,000. And especially when houses continue to get more and more expensive, I mean, you're saving and saving and saving, and the price of a house just keeps getting further and further out of reach. So there will be a correction at some point. I mean, probably when the federal government collapses, all this, everything is going to reprice, homes, jobs, assets, everything's just going to get reshuffled in the deck. Personally, I see it as a good thing, but it is what it is. Let's see. Consequently, 61% of Americans find themselves priced out of the housing market, even with a sizable down payment. The affordability crisis varies across states and metropolitan areas, with only 4 states and 6 of the 50 largest metro areas offering homes within reach of median earners. Notably, Los Angeles emerges as the least affordable city, with prospective buyers needing an income nearly 3 times the median income to comfortably afford a home. These findings underscore the widening gap between housing prices and household incomes, painting a troubling picture of housing affordability in the United States. Well, probably the best thing could ever happen is for the United States to collapse and let, I can speak for myself. I'd like to, get back the 30 or 40% that I make that goes to the federal government every year that's just wasted on wars and welfare. So, I like I said, I do see better things ahead, but we're going to have to crawl through a river of crap to get through it, kind of like in the Shawshank Redemption, where Andy Dufresne crawls through that sewer pipe out to the out to the creek where he escapes. So, we're all in the same boat, unfortunately. It just matters how much you prepare between now and then. So, all right. Well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information is right there on the screen. See it? dsafinancialgroup.com. Anyways, all my contact information is there. I hope you have a wonderful evening, and I shall talk to you again next time. Adios.